Hey Deb, what are we going to talk about today?
Today, we're going to talk about what Bitcoin's doing, what the economic news forecast is for this week, and then also last week we did investment, getting into crypto using a dollar cost average, and today we're going to talk about getting out with profit.
Getting out with profit, that is the whole point. Okay.
Meet NordPass. It creates strong passwords for you, keeps them safely locked in a single place, and automatically logs you into all of your favorite online accounts. And you can access it all on all of your devices, even when you're offline. That's NordPass.
Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams.
Hey Deb, what are we going to talk about today?
Today, we're going to talk about what Bitcoin's doing, what the economic news forecast is for this week, and then also last week we did investment, getting into crypto using a dollar cost average, and today we're going to talk about getting out with profit.
Getting out with profit, that is the whole point. Okay. Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. I am joined by Crypto Deb. She is a professional trader, and we do these videos once a week where we look at Bitcoin, we look at economic news and other things, other charts that might interest us and that have a relevance and a reference to crypto. Now, before we start by looking, I think, at the Bitcoin chart, please subscribe, follow me on Twitter, CryptoRichYT, join my official Telegram announcements channel, and also, if you're watching this on YouTube, where's my finger going? Come over to bit.ly CryptoRich Odyssey and also bit.ly CryptoRich 3Speak, although all my videos are on Odyssey, I don't always get them up on 3Speak. Okay, here we go. All right, Deb, so shall we start by looking at Bitcoin? Do you want to share your screen?
I would love to share my screen. And here we go. So what is Bitcoin doing? So on a big chart, it's still down the bottom here. And then we zoom in, and we zoom in some more because this is that big ascending triangle. Descending triangle that I wrote last week.
Yep.
Do that. And it's still in this descending triangle. And right now, let me just zoom in all the way because it's just not going anywhere. It's bouncing between these two approximate lines. So at the moment, we're at 19,117. And as you can see, we've been in this range, which goes between about 18,534, and this top one is 24,114. For a good few weeks now, approaching 3 or 4 weeks now. So, yeah, that's Bitcoin for you. It's not doing an awful lot, apart from going sideways.
Well, just look at that descending triangle. If you zoom out and you look at the larger frame, that is bearish.
It's very bearish.
It keeps retesting that support, and mostly when descending triangles break out, they break out to the downside. Now, is this a moving average you've got, the red line?
Yeah, I have. They're supposed to be particular colours, and the forex traders will tell you that. I'm just like the big purple line's the 200. I've got the 20 and the 50, but I will take those off if people find them confusing.
No, put it back, the 200.
The 200 is the big purple one, right at the top.
Okay, it's below the 200 daily moving average. All right.
And we've been down below the 200. So actually the 50s kind of a little bit better. It's kind of like a bit more meandering. Yep. But we haven't broken through or not broken through and then carried on above the 50. The last time that happened was back in July.
Yeah.
So we're still underneath this 50. And at the moment, it doesn't look that positive for turning around and going back up.
Right, okay. So Bitcoin looking bearish and not much in the way of volatility. But if I look at the volume is going down the last few days, which suggests that a breakout could be imminent.
Yeah, I think the other thing to watch, though, is just when you look at these, like on the Fridays, Saturday, Sundays, like that was Saturday, Sunday, it was a little bit more. So Bitcoin's not really going anywhere. And if you have a look at pretty much all the different asset classes, be that crypto, be that stocks, it's all pretty stagnant at the moment. I feel like everything is waiting for the news.
Right, which is on Thursday with the CPI index.
Which is on Thursday with the CPI index. So
Consumer Price Index for the United States.
Let me just share my screen again, and I'll show you where I find that. So I use one called Forex Factory. There's plenty of them around. I know that Market Watch have one as well. I like this one because the important stuff is coloured in red. And as you can see, on Thursday at 8:30 a.m., that's New York time, these figures come out for what the CPI is. And the most important one is this Y over Y. So that's what it was. That's what it was in where are we now? October. So that's what it was.
8.3% in October.
No. It was
8.1%.
No, it was 8.1% in August.
August. Okay.
It was 8.3% in July. So the figure that we're expecting now out for October is the figure for September.
Right. I think likely to be higher.
Well, this is the thing. I mean, the jobs news last week was really good, which is why lots of things went down on Thursday, because it was like no one needs to look at alternatives because actually there's still lots of jobs being created, which was a big surprise. But it's one of the measures that they use, and also there's a lot of commentary about the jobs data that comes out. Wealthion, name check to them, did another great video about what that means and how that's a very not good measure of economic health. But yeah, so waiting for this news on Thursday. So if this comes out lower, let's suppose it comes out at 7.9. I'm just making this up, I'm not saying it well. But if it comes out at 7.9, that means that inflation is slowing down. So then they don't have to raise, in theory, they don't have to raise interest rates as much to try and keep destroying demand. If this figure comes out higher, let's suppose it came out at, say, 8.4, then they're going to be like, oh, we need to push interest rates that bit harder to keep destroying demand and then bring inflation down. So what this figure comes out at then obviously has potential levers on the market, as it were. So the best way to look at this is look at the last time this happened. So you can go up here to the top of this and change the dates. So go and look at what it did in the second week of September, and then go and have a look at the corresponding asset that you're trading. So if that's gold or silver or Bitcoin, and then you can see, hang on, when it came down, actually then the Bitcoin dropped or the gold dropped, or if it went up, then it went up. Like, you can start to notice those patterns together.
Right. Okay. There's a couple of things I want to say. So one is I recorded a video with Tom Luongo and Rafi Farber. Tom Luongo from Gold Guts and Me, and Rafi Farber from the Endgame Investor. And Rafi does a lot of detailed work on the gold and silver markets and the commodity markets. And Tom Luongo does more macroeconomics. So please go and watch that on Odyssey. Then the other thing I want to say is I actually kind of subscribe to Tom's thesis that the Federal Reserve are raising interest rates not to be inflation, because this is inflation that's supply side. There's a problem with the supply chain. And that's why inflation is going up. It's not demand side inflation. And the Federal Reserve, the banks that own the New York Fed, do not want central bank digital currencies as promoted by the WEF. They don't want to lose their business model. So they're raising interest rates in order to bankrupt the ECB, drive capital out of the euro, in particular the euro dollar, drive it into the United States, so that the US is no longer socializing all the quantitative easing and the interest rates for the rest of the world. And in doing so, that will bankrupt the WEF and the Davos elite, who want us all injected with a biometric digital ID, carbon tracker, and central bank digital currency. And Goldman Sachs and JP Morgan are like, no, we're not losing our business model. And then the other thing to take into account is the war in the Ukraine and Russia, the war between those two. And one of the things that I was really surprised about yesterday is that when Russia attacked the Ukrainian cities, the price of gold dropped. And normally it should have gone up because it's a safe haven asset, but it dropped because there's not a lot of dollars floating around the world. And why there's not a lot of dollars floating around the world is because the Federal Reserve wants its dollars back. And that's why they're raising interest rates. So that's just another cut at it. And Tom Luongo has been saying this since June last year, and I've been tracking it and what he's saying, and it's been working out that way. And now today I saw an article heading in Zero Hedge that the European Union, the Europeans and the ECB are screaming blue murder at the Fed. You have to stop raising interest rates because it's bankrupting everybody.
I was very. I read an article today by Kathy Wood of ARK Investments saying, "Please stop raising interest rates."
Yeah, all of them, the UN, the IMF, the ECB, they're saying stop raising interest rates. And Jay Powell's like, nope, going to raise interest rates. Not our job to take care of the rest of the world. So, and for them, it's a matter of survival. But anyway, that's his thesis. And if you want to know more, go follow him and on his channels and stuff. And he will be on my channel at least once a month with him and Alexander Mercouris from the Duran. Okay, so thank you for that. Let's have a look at Ethereum. Oh no, you wanted to talk about how to take money out, because last week you said dollar cost average, as the price is going down, you should keep selling either a percentage or at certain points buy into holdings. So now I've got 100 million billion trillion Bitcoin.
Woohoo!
That's right. Now what do I do? How do I get out? Although
okay,
I don't want to get out into pounds.
Okay. So I'm just gonna start this chart again. So suppose you're like, okay, so I've seen the price go up, happy days, it's gone up 40%. And when it comes down, I'm going to start dollar cost averaging in. So you can say, you know what, I'm going to let it go down. Let's say 100%. Right, let me just squeeze my screen. So you say, okay, I'm prepared to invest all the way down to, let's maybe not do 100% because that number makes no sense at all. Let's say 80% then. So you say, you know what, I'm going to go take my $1,000 and every time it goes down 10%, 20%, I'm going to buy. So you set those levels at which you're buying in. So now you have been buying in and you have bought in from here. You've now invested money all the way down to 60-odd%. So you've bought in at the 60-odd% range. So let's create our fantasy scenario where now the price, it's having a little dip, it's had a think about it, and it goes, whee, and it goes all the way back up.
Yes.
Hooray! Happy days. You're rich. No, you're not. If you've got money and it's made 200% and you've got 300%, 400%, and you've got none of that money, back out, you are not rich. And obviously, given we want to, we want to fill our crypto pockets with crypto profits. Is that what we're doing?
Yes. Or
right?
gold and silver.
And gold and silver. Is you want to sell out when it hits certain targets. Now you could say, you know what, how much money or what percentage do I need to sell to get 100% of my real money back? So you've bought in, so you've allocated $1,000, you're going down to 80%, so you've spent say $800. So now you're going to say, okay, how much allows me to get all my real money out or half my real money out? So you could say, you know what, when it gets up to 100%, ish, I'm going to sell, say, a tenth of my holding. So you sell a little Bitcoin and get 100% out. Some of your money out. And then you say, you know what, I'm going to let it go up to 200%, and then I'm going to sell a little bit more and get some more out. So ideally, at some point, there's a point where you've sold all of the Bitcoin that you did take and you've turned it back into stable currency. I've done this. I did very well. So when people say, oh, like Luna, I was like, I bought that a while ago. And then when it tanked and it slid down, I mean, it was ugly. And I'm like, they're going, I don't care. I sold out some at 200% or 300%. I sold out some more at 600%. I've got all my real money, as it were, all my real fiat currency out. I don't care what the price does. It's it's irrelevant to me now that I've, got it.
That's very, very good, Deb. I'm like a monkey holding the banana that can't get it out.
At some point,
hold that banana as a hodler, right? But this is good. So you dollar cost average in, and then you dollar cost average out.
You dollar cost average out. So if you get back up to here, that's what. Let's say it goes back up to this level. So we're back up. It's 300%. And obviously, how many days did it take to do that last 300%? If you bought some in 2020, what was that? 159 days. So if you, where else and how big a jump was that? Hang on, let me just. So that was wrong one, same one. Hang on, let me do this again. So you did 400%. So you did 2% a day, basically. If you've got over 400% and you've got 200 days, you did over 2% a day. So don't be crypto stupid is the thing. So dollar cost average in, dollar cost average out. And then when you've got that money back out, you can then make a choice about, well, then what do I do next with it? Do I go into some other cryptocurrencies that you might get into? People think you have to dollar cost average in with a load of money. I mean, I dollar cost average into some of the coins. I think even when I was fully invested, say all the way down to 80%, I think I'd only spent $50 in total.
Mm.
You know what I mean? Because the way I relate to crypto is there's a lot of projects out there, a lot of brilliant projects, some that you have taken the time and effort and energy to personally dig into, and you believe in it, that R coin that you keep going on about, you really believe in it. It's great. I don't know about that, but here's what I can do. I'll chuck 10 quid at it. Oh, look, someone else thinks that one's really good. Okay, I can put 10 quid at that. You don't have to be like this super genius that some people think you have to be able to do this strategy. If you only did this on the top 20, what I'd call
blue chip cryptos.
Yeah, blue chip cryptos, like those ones that have something behind it, besides a world famous person tweeting that you should get into this coin because, that have got property utility. Just put a bit of money into all of them. It's the way I relate to it, it's like I'm backing horses and I can bet on the whole field, pretty much.
Yeah. And with some of those altcoins, it's possible, if I put in $10 into a small altcoin and I lose it, fine, it's only $10. You can never ever put in more than you can afford to lose. But also, if I put in $10 and that can increase tenfold, 100-fold, very nice. I can take out my $10. Could even take out $20 into fiat currency, which isn't real money, by the way. The real money is Bitcoin, gold, silver, and then put in something else. Maybe I could put it into gold, silver, and something else. Yeah. Okay. Yeah. All right. Deb, I'm going to share the screen. Let's have a look at the Ethereum chart because I like to have a bit of this. Oh, this is Atom I've actually got. So I did this a while ago. And people should know I don't trade, but I do look at the charts and stuff. And Atom was going in this range like this, constrained by these blue lines, and it's now just moving sideways, slight upwards trend around about between 12 here, was it $12 up to about 13.20 or something, and the moving average is getting closer and closer. Volume's dropping. This, by the way, is the Bitcoin price, so it will be impacted by the Bitcoin price, as all cryptos are, but it's looking like it's getting ready for a move at some point, with volume going down and the moving averages squeezing together. And then at a fundamental level, there are some very, very exciting things happening with Atom. Very, very exciting things, including the launch of Atom 2.0, where it'll make it easier for other Atom-based projects to delegate to Atom. You stake Atom, you will receive tokens in some of those other projects that are using Atom delegators. Now, Ethereum, this is Ethereum on the daily chart. Let's have a quick look on the weekly. I've not looked at this for a while. Anything you want to say about this, please feel free to do so. So Ethereum is pretty much tracking the Bitcoin price, not quite as volatile as Bitcoin. And we did have the hype about the merge, which really hasn't
the hype about the merge. I was waiting for the merge, and it was like a bit of a damp squid, if I'm honest.
It was a damp merge, right?
Yeah.
And it's below the moving averages, moving sideways. Volume has gone right down, but some of it could be the weekend. So I think it was just waiting for a move here.
Well, you're on a weekly chart for the Ethereum still.
Yes, I am. So let's have a look on the daily chart. Yeah, sideways action below the main EMA's moving averages. Not much happening. Supported around about 1250. Yes, and looking bearish because you got lower highs here, and lower lows.
Yeah. I really do think the news. I think it just feels like this. The markets. One of the words I've used to describe the market previously when talking to my friends is like it just feels a bit fragile. Like it's like, or it's like it's stretched so far and then it's going to break or something's going to happen to it, but it's got to get out of this nothingness. It like goes up a bit, it goes down a bit, and this applies across a number of asset classes. It just and it's like, in theory, I think the whole market should be Not that they are behaving to how I think, but they should be going down. And at the moment, they just feel like, what's going on with them? They're just static. Like, they're not going anywhere or doing anything. And I do think when they do break out of whatever patterns they're in, so should Bitcoin break below that ascending triangle, I think we're going to go down quite a good amount. And if we should break up out of that ascending triangle, then we could really be up. And I think what could happen is then you get both of them. Like, so it's like, oh no, some asset classes will go like down and they'll continue down. And then some of the other classes will go, you know what, this is where real value is. And they'll go down with the market and then they'll turn, go back up. So if you look like, what gold and silver did, during the pandemic, or the start of that pandemic, they went down massively with the market, and then they were the first ones back up out the gate. And I think that kind of behaviour might happen again as people look for those safe haven asset classes. So I think both of those things could be true. And in the meantime, there's a whole bunch of volatility once things start to move, and we're just waiting for things to start to move. So I'm not really holding my breath right now.
Yep. No, I agree. And I think as people, there's a rush for dollars. People want dollars. They want to be in cash. So then they'll be cashing out of these. However, with oil prices going up, that is bullish for gold and silver in the medium to long term, because it'll cost more to get that gold and the silver out of the ground. Yeah. Okay, Deb, thank you so much. Anything you want to say before we finish up?
No, not really.
All right. Well, listen, anybody who's watching, comments, questions, let us know in the description below. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Deb signing out. All the best. Bye-bye.
Bye.